The ASX 200 has climbed just 0.5% this year, so investors are increasingly turning to high conviction funds for stronger outperformance, according to Macquarie Investment Management.
We're getting a lot of interest from investors who are looking for unconstrained funds who can do much better than the benchmark.
We found that Macquarie's high conviction fund not only outperformed the index across all periods, but produced a return of over 17% just this year.
But even if you look over 3 years, the fund's done 18%, which beat the market by more than 10% after all fees.
So how do they do it? Well, Blake says they're quite unique as their team handpick 20 to 30 of their best investment ideas that they've thoroughly researched and debated as a team.
We have a philosophy of focusing on what matters. And so we don't get bogged down in trying to understand every single thing about a business. Instead, what we do is focus on 2 or 3 things that really matter, and we spend all of our time getting to know those things really well. One of the biggest contributors to performance was AGL, and some of the work we've done focusing on what matters was on electricity prices. Electricity prices for the previous 5 years had been in decline. It was a terrible place to be an electricity generator. We were pretty quick to work out that the market was actually going to start to rise in terms of electricity prices, driven by more demand and less supply from cheap gas in the market. So we took a position in AGL. If you look at the stock price a year ago, it was $16. Today it's almost $20. The Telstras of the world have been identified by the market. I think the easy money's been made there. What we've really been focusing on is the future yield, the yield stocks of tomorrow. And one of those is Chorus. Chorus is building the NBN in New Zealand. A year ago they weren't paying a dividend. Today they're on about a 5% dividend yield, and we see potential for strong growth in that. So future yield, the dividend stocks of tomorrow is a place where we're finding lots of opportunity.